Okay, welcome. Um, let's go straight to the point as usual. Yesterday, for the post analysis, as you can see, GJ played out very beautifully. He made this structure, and if you remember what I said, if you watch the forecast for yesterday, that price closed within this supply zone and was showing weakness in dropping. So what I was anticipating was buys above the break of the structure, stop loss below, and for it to rally. Now price played out beautifully, rallied to this area, this gray zone, which is supposed to signal sellers orders waiting to be filled. The higher price tried to come, the harder it was marked. Because look at how price rallied here, as if it had no competition. But as it entered this zone, it started facing some rejection. One, two, started creating more of top wicks than bottom wicks. So this was signaling what potential sellers entering the market. But as usual, I'm not going to just jump in. I just had the feeling that yes, this was signaling weakness from the buyers in favor of the sellers. Okay, so as you can see, has played what it was supposed to do. For today, what I'm looking at is break below the structure, stop loss above it, and sales. As I'm speaking with you at the moment, I am already in this trade, um, waiting for it to do whatever it wants to do, then continue its bearish momentum. Um, there's something I want to show you quickly. Yeah, if you look at this, this is something that occurred. I just want to bring your attention to it. Most times market tend to like mirror itself. Whatever I did yesterday, we tend to do it the day after. Check this. What's the time by this time? This was 1:30, 2 o'clock, 27th of June, 2 o'clock, 27th of June. The bulls came in. What's this? 2 o'clock. This candle is 2 o'clock, 28th of June. The bulls came in. So in favor of the trend. So what I saw was that okay, this is what 2 o'clock. However, this 2 o'clock we are looking at what sales now. So I'm anticipating what sales to come, and at least just digest this new information I introduced today, where market tends to repeat itself. Look at what happened. Just the same mirror break, stop loss here, buy. The same mirror break, stop loss here, buy. I guess you may have not observed this, but it's not like it occurs all the time, but market tends to. But I don't want you to cram behavior of market just like patterns. I'm not going to teach you to cram patterns. I want you to understand how to read price action. It's just by reading price action, all of this will just become second nature. So, like what I'm telling you here, I'm already in this trade and expecting it to drop to this point and even below. So, whichever way, I'm just going to allow this play today and tomorrow. Let's see what we're going to bank this month. So, this is for British pound, Japanese yen. Let's look at what we got for gold. Gold, the erratic fellow. Okay, for gold, excuse me, gold is playing beautifully. Um, if you remember, what I just talked about on DJ happened on gold as well. If you watch the forecast for Monday, then for yesterday, Tuesday, you'll recall that I said we were in sellers territory. All we needed was perhaps a little push from the buyers, then slam dunk to sell. Yesterday, the same thing. We're in sellers territory. All we need is push from the buyers, then slam dunk. Everything just played out just as we anticipated it. Now, for yesterday and day for yesterday, I took the trade on gold because the structure was predictable. Okay, the structure was anticipatable. It was something I've been seeing over and over. Okay, but for British pound, Japanese yen, I didn't take it because it was sort of going against the bias. You understand? I will remember what I said when price before it played out that yes, this was going to go for a buy. This time I'm talking about the British pound, Japanese yen. If you look at it very well, yes, we're like, okay, this was going to go for a buy for sure. I've seen this play out when once price drops and closes in the zone, shows weakness in dropping out of this support, then it could mirror it to the resistance. Then if it's in confluence, perhaps with a larger bias territory, you anticipate it to go further. If you don't understand the structure, then just watch the forecast for yesterday. I think I broke the explanation down. Watch yesterday's video, then today's on to get a strong grasp of what I'm talking about. For today, I'm taking this sell on GJ and not the one on gold because GJ is giving clear market structure. Break. I wanted to take here, but that will be taken aggressively. So I wanted to take conservatively, which is here. So whichever the case, I know that it's going to mirror drop down and even further. This, in fact, let's see what this is going to give us. Perhaps it's just going to drop and keep dropping towards the next month. Let's just watch and see. So, for what I'm trying to say is that I anticipated these buys on GJ, okay, but sweeter buys would have been above here. In other words, easier buys. This buy was just mirroring the buys that occurred here the day before. Okay, so but gold showed or gave a cleaner price action. Okay, that's what I was just looking at, a cleaner price action. I'm like, okay, at least I have seen this price action. I know what it could do. It is predictable, it is anticipatable. So let me take what I know has a higher what feedback. So I took sales. In fact, I forgot yesterday because of its erratic nature. I normally just yesterday I did something though in confluence with the strategy. I went to the 15 minutes time frame. This was where my sales were triggered here, some others that weren't filled here, activated here, because once I saw that this was pumping hard, I added positions, but still 1% of my account. Don't forget, I'm trading 1:3. So if I put all my percentage, sometimes it will not activate. So I just discovered that it is easier to open smaller positions that will sum up to the 1% of my account. Because if I use 1%, perhaps just a tiny portion of it may not allow it to be filled. So what I do now is divide the positions into smaller positions. It's crazy, but what will I do? You got to just find a way to meet up with the 1%, not less than 1%, so that the struggle or the hustle for the day will not be futile. So what I'm trying to say is that I took sales here, stop loss above the structure, got my banked my 1 hour, okay. Price retraced. Another sell would have been possible here, but I've already taken my sell. Look at what occurred here. It's the same thing that occurred here. Price dropped. For those people who had not entered their sell, it came directly to the neckline and dropped again. Price dropped, came directly to the neckline and dropped again. So what I'm trying to say is that always just come here, watch the forecast, and learn something and see how price behaves. It's as simple as that. For today, I'll be looking for cleaner cells below here. Then the price breaks this resistance, buys above here. Okay, but if you look at it, better sales will occur because we are already in what? Seller's territory. We're already in seller's territory. But price is just giving us some vibe to say that, hey, don't forget, we're at support. Look at the weakness of price coming down versus how it rejected. So let's see what's going to happen. Yesterday, gold was just playing some ping pong, like serious ping pong. Down, up, down, up, down, up, down. Then it started sustaining below this support level. What I'm trying to say is this. Gold most times could do this, and when it's in a range, ask yourself first of all, which territory are we? If you're in seller's territory, then go for more of the sells. Whenever it retraces, hit the sell. It retraces, hit the sells. I notice some people will want to buy, take the buys, take the sells, take the buys, take the sells. It is safer if you're in seller's territory and it's ranging like this. Just be smacking the cells, closing at the support, smack the cells, closing at the support, smack. If you don't want to close at support, wait to see if price is going to reject. Once it's coming closer, you can close your trade, hit the cells again. If it's coming closer, close your trade. Like if you see, each time sales perform, it's as if it's making a new low. But each time buys perform, it's not making a new high. In fact, price is dropping. So that's to tell you that the sellers are still interested in making dipping the price. So once this one came, it didn't make high. This one came, it failed to make a new high. Know that that energy will be pushed into the next phase, which will be these guys who did not perform as high as this will be very angry. That means they have a lot of energy to smack below this. I'm just trying to make it easier to digest. So in other words, if price fails, it makes a high, came above this, oh, beautifully. If it drops and fails to come even above this, then that means the energy that was sustained would reverse. That means the sellers have added more position compared to the buyers, which is what indicated this aggressive smackdown, even going below this. And I did not want to just place my take sales here. Where would my stop loss be? Here. If I did that, I would be holding a drawdown till now. I don't want to enter that kind of trade. And besides, it was getting close to beyond my trading time. So I just said, okay, I've banked what I'm supposed to bank for the day. I'm comfortable. I think yesterday, I believe I banked over 2 or 3% on just this tiny position you're seeing here. Just following the explanation I gave. If you didn't get it, um, go back, rewatch the video because I'm going to upload it, then try to understand what I was trying to say. For Bitcoin, Bitcoin is just playing beautifully. If you followed my forecast for yesterday, I would advise you go and watch that, then come back and watch this. Okay, watch that, come back and watch this so that you understand better what I'm trying to say. Bitcoin is performing very beautifully. As at yesterday, price was here. I was like, okay, it will give a deep retracement, break the neckline, drop. Positions here would be added, drop. So I call this Z1A, I think. Then if it just continues down, this was Z1B, but sweet buys would only occur above here. As you can see, price did not break the highs, but broke the low. Now the sales have been what triggered as well. So let's see what is going to happen for today on Bitcoin. Please don't take any buys now. Okay, it's better to take buys when it's very clear that price is going to perform as you anticipate. Don't take buys because it's getting deep as in buy the deep. If you buy, let's assume that yeah, Bitcoin might eventually play out for sure. But let's assume that you bought the dip when people were saying buy the dip, buy the dip. If you had bought, let's say, the dip around here, price is now close to your entry. I'm sure you would not want to close your profit once you've seen it broken this high because you say, okay, it's going higher. Let me hold it. Price has come to entry. If it comes below, what are you gonna do? And that does not mean that this is the low it's gonna make. It can drop even further to even this low here. So what are you gonna do? So is it not safer to just wait, follow my forecast, wait to see where price will clearly in buyer's territory so that once you're taking it, just like what has been happening on Bitcoin all these years, you want to join those who are marrying, not those who are holding. You understand? Bitcoin has been playing out beautifully. Let's look at it. Wouldn't you want to be in this kind of trend? Something like this that goes up and keeps pumping. Even here, goes up and keeps pumping. So right now we are in the phase to chill for the buyers. It's just the sellers that are in control now. Nobody should deceive you by saying buy the dip. Anybody who advises you to buy the dip, let me tell you frankly what he's trying to do. He's trying to get more people to add position so that his own big portfolio or the Bitcoin is holding would not lose in value overnight. And once it comes to an appreciable level where he feels that, okay, I can secure my bag now, he will sell it and leave you holding the bag. And you'll be like, oh, but this guy said I should buy the dip. Well, you can't hold him responsible because he's not a financial advisor. And if he was, you're expected to reason or think for yourself. It's your money. You should do your own research. Okay, so what I'm trying to tell you that clearly price is in favor of the sell. So don't try to think or take any buys right now until there is what a clean bullish momentum. So I'm going to stop here for now. If you got any question, feel free to ask. Don't forget as usual to subscribe and hit the notification button, comment and like. Bye for now. Cheers.